And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good afternoon, friends and traders. Welcome to the Limit Up Podcast. I am Dan Hodgman, sitting down with, as always, Jack Belzer. Jack, how are you?
Hi, where am I today?
I was going to say, it's a different place every time I see you these days.
I got a better setup. I am in my dad's old office. And
how about that?
He was a doctor, and true story, that is an actual human skull up there behind me over here.
I thought it was a baseball hat at first.
Well, it's a very gruesome baseball hat, I guess you could say. But yeah, doing well otherwise. This will hopefully be my last week where I have to be running around with this equipment. So that's good. How you been, Dan?
That's outstanding. Can't complain. Not that anyone here cares, but I'm very excited. Piers are going in at the lake. So that means boats are about to go in. Summer's around the corner. And me disappearing early, many days to go get on the water are in my future.
Well, nice. Well, maybe you can afford some more equipment after today's market performance. How's that for a segue?
I'd love to sit here and talk about these markets and be excited. My portfolio is still not very good over the last few months or year to date.
Oh, demolished. Yeah, I know with the Top Step Flyer this year, we bought some. How do you say it? Rivian, right?
Rivian.
Yeah, that's been getting hammered pretty good.
Yeah. Rivian's been a topic. I've actually seen some of them running around. I mean, my portfolio. Let's just say I pulled up some of that stuff today and I closed it out really quickly.
Yeah, I'm not going to look. I will say we need to discuss about our predictions last week. And I'm really upset when at the end of the episode, we guessed where the NASDAQ would be at 3 p.m. a week from today on Thursday. And boy, did I feel smug last night. We were at like 13,700 and I called that we were going to drop below 13,000. And I was like, man, I'm going to go and gloat. And then what does the market do? 500 points up in the NASDAQ today.
I'm just going to say, Jack, do you recall the number I said?
You said we'd be down 500. So,
and we were trading 13.7.
Yeah.
Right now we're 13.32. So I'm going to take the victory on this one.
You could take the victory, but I still called the 13,000. So we're both right. Yeah. So why don't we give a quick rundown of the goings about today? It's a wild one. That GDP number, possible recession, but that's good for stocks now. So
kind of interesting. Well, crude oil, there's no question about it. Crude oil continues the rally to the upside. The last 2 days or so, we've seen some attempt to push lower, zero acceptance below that $100. No, not even barely any test at $100 today. We rotate from about 101 up to $105 end of the day, right at 105.32. So those gas prices and Rivian are sounding really nice right now. I wouldn't mind an electric car. I actually had a phone call with my brother today about potentially putting in an order for some electric cars for ourselves to offset the gas costs, but I'll leave that as is. Stocks, so Jack, you alluded to it. We got a big uptick here today. GDP comes out, a little questionable, but stocks don't care. Stocks are happy with the information, and you get a big uptick here until end of day sell off.
Yeah, they like the Fed put. That's what they like. Came in at, I believe, minus 1.4, but it's a very deceptive number. We're still in this crazy COVID measurement time where these numbers are very hard to digest. So never been a number quite like this. Normally down 1.4 would be an exceptionally bad number. It'd be like the beginning 2 straight quarters of negative GDP growth is a technical definition of a recession. This number today, a lot of it had to do with inventories and import export balances because the consumer spending was up 2.7, which was fine. The business investment was up like 9.2% year over year, which is not something you usually see in recessions. So there's a lot to digest there. Your guess is good as mine, but I think we go back to the people care the most about rate short term. So that negative number, I think, is what sparked this today.
And I will say this too, keep in mind, you come into the end of the day here and we saw both S&Ps and NASDAQ with a pretty heavy sell-off in the last hour of the day or last 45 minutes or so. What that indicates to me is you're seeing short time frame bid this thing up. So do we expect, I'm going to say, do I expect these prices to hold higher? No, I really don't. I think you saw a lot of short time frame people get in, hey, quick move, let's find an opportunity. Both these markets were broken down to right down to settlement price. So good buy opportunity for a cheap entry. And then you sit in that trade and you got the runner and you're looking to watch both of those markets move to the overnight high. They blow right through that. You're sitting back and you're saying, hey, I'm going to wait till end of day, get it right before close. I'm going to go ahead and start peeling off my position. I think that's what you saw a lot of here today.
Pay close attention to the volume at these levels, at the higher levels. There was low volume on the last sort of spike up and it was a good opportunity to sell. But like today, when you have a lot of people that are short, especially if you get a big rip today, it can kind of feed itself. I think there were some people getting squeezed a little bit there too.
Absolutely. I'm talking about squeeze. I'm getting the notification now. Earnings are coming through. Amazon loss per share is $7.56. Revenue beat slightly. They were 116.4 billion was what the actual was, where the expectation was 116.3 billion. So small beat there, but a miss on earnings per share. So earnings, they're going to be a heavy factor too. I mean, obviously these big ones are coming through Amazon today. That's one of the big ones. Let's go ahead and take a look at gold. Gold is relatively quiet, continues to be this inside trade. I think gold is still digestive, right? Gold is just in that holding pattern, waiting for some more reaction, waiting for Fed. Hey, maybe this GDP stuff is going to force the Fed to make some changes or adjust the language that they're speaking, which could force gold to make some moves. So gold inside day here today, worked around settlement price all day and ending up near those overnight highs. Euro down a little bit, and no surprise here. We're talking Fed continuing to raise those rates. Yields continue to rise, and you've got the 10-year note down. So markets are touched on. Jack, I think you nailed the big one here, GDP. That's the important one here today. And the markets were okay with those numbers.
I think so. I'm trying. My computer's slow right now. I'm trying to check out what Amazon is doing after that number, because we just talked last week. We were talking about the concentration of
Amazon shares plunge 8% on weak sales forecast.
Whoa, buddy. 8%.
Well, looks like Elon Musk might have to come in and buy Tesla or buy Amazon next.
Yeah, let's see what the Nasdaq's doing now. Yeah,
I truly have enjoyed the tweets, and I don't need to go down the rabbit hole of the Elon Musk buying Twitter, but I have truly enjoyed the tweets coming from him here the last couple of days about all the things that he might buy next.
Yeah, guy's a madman. I'll be interested to see if after hours the Nasdaq doesn't start to hurt. After all that, Amazon 8%, that's a big gap.
Yeah, now 9.75 down $280 a share. So definitely taking a hefty hit there in the Amazon.
I'll have the world's tiniest violin for Jeff Bezos. Anyway,
don't feel bad for him.
Yeah, today we did trading hour yesterday. Tops Up Trading Hour. It was great. There'll be a recording of that out at some point. But we took questions beforehand online, and I kind of want to talk today about one of the questions we got. Somebody asked, I'm looking for futures trading strategy. I come from stock and option trading, but I find the futures market too volatile. How can I manage not to trade and not get stopped out? That got me thinking about a larger thing, is sort of what the transition's like from stocks and options to futures, because I think a lot of people start trading stocks, certainly. Probably the usual progression for day traders or short time frame would be like stocks to options to futures or something like that. Dan, would you say that's correct?
Yeah, I think obviously I'm an anomaly. That was not my route, but I think that seems to be the standard progression, right? You get into stocks because, hey, it's easy. You can do it right on your phone. There's a lot of accessibility. That barrier to entry right now for stocks has just been completely dwindled with the introduction of Robinhood. I mean, there's so many apps out there. I have one that I enjoy. It's called Acorn. It's just like a roundup thing. It just takes 50 cents or whatever on my credit card every spend, whatever it is. I use it as funny money. Like, hey, I think I've put a couple $100 in over the last 2 months, and maybe at the end of the year I'll look at it and maybe I'll cover a Christmas gift for someone, right? Like those are the things. Like there's the barrier to entry has become easier, but it creates an excitement. And then you're thinking, okay, well, what can I do? I don't want to put up $5,000. I want, it to only buy one thing. Then you can start to open it up, and then options become that really next nice entryway into things. So I think it's a very good progression. And then all of a sudden you hear about this thing called futures, and the game changes for you a little bit.
Yeah, so I think that what gets people trading options and futures is obviously, or forex really for that matter, is the idea of leverage, which I'm sure all you out there are familiar with. But there's a lot of things that kind of makes trading stocks for trading purposes. Not, I mean, stocks are great for long-term investments and things like that, but there's a number of obstacles that make them kind of hard to day trade. Mainly that you need a lot of money to do it. Even when you're trading on margin and things like that. I mean, what is it, Dan? Don't you need, what's the pattern day trader thing? You need like a $25,000 account if you make a certain number of transactions or something like that?
Yeah, a certain number of transactions. I mean, it's very difficult. It's extremely difficult to kind of get into the day trading world of stocks. And then, not only the amount of capital you have to put up to, Jack, but you got to think about it, right? Some of these stocks, there's so many stocks out there. Like, which one am I going to trade? Am I going to be an active trader on one stock? Am I going to be active on Tesla? Or am I going to try and, there are programs out there that you can pay for radar alerts or something like that, where you get the alert pop up of like, hey, this is a high volatile stock today. They're seeing movement here. You got to jump around, but then you don't know the history of that stock. You don't know the background. You don't know exactly what's going on. So you got to redo the research on it. There's a lot of information out there when it comes to just stock trading on top of the capital investment.
So much insider information and things like that flowing around there too. And I feel like, especially once you get to sort of like the more degenerate realms of stock trading, you guys have all seen The Wolf of Wall Street. There's some kind of shady stuff that goes on. The lower the market cap you go, you start trading Tesla. Next thing you know, you're trading some, I don't know, bottle cap manufacturer in, French Guiana or something like that with a market cap of $100,000. I mean, like, it's a slippery slope.
Jack, you mentioned something, and I'm gonna regret saying this, but I'm gonna say it. I saw TikTok recently. I enjoy scrolling through TikTok. It's mind numbing. I saw TikTok recently, and it was like the mannerisms of a prop bettor. And that was exactly what you kind of had me thinking about too, right? Like you start in one thing, and then you go down this rabbit hole like prop bettors. I saw this video and the guy was like, well, I got the mortgage. I got a mortgage payment for this month on them picking the blue Gatorade. Oh man, it came out red Gatorade. And like things like that, like that's where I feel like you can easily get into that realm when it comes to stock trading.
Oh yeah, you always have to be careful on that. Yeah, I had friends that played professional poker, and they would tell stories about. I may have said this on the show before, but just like, people that were like had iPads, so they're playing hands of poker while they're betting like halftime lines in WNBA games. I mean, that's a rough way to go through life. But
yeah, it's like the odds. I can play this one. I can play the odds here, and if I hit on one of the 17 bets I make, I'm walking away scratch. It's like, but you're betting on crazy things that are unrealistic.
Yeah. Now there are indices that are kind of like futures. Like I'm sure a lot of people trade stocks trade like the SPY or something like that. But really, the obstacle there just becomes a matter of leverage. You're not going to get that much margin leverage. So if you're doing pure day trades, that's tough. So then people go to options, I love options. I trade them a little bit. Dan, you have extensive experience trading them. But the big thing I've noticed just from the general retail landscape as far as options And I would love, you know what I would love? I bet you Robinhood
What would you
doesn't.
love, Jack?
I would love the following, and I bet you Robinhood doesn't release this info. No, they absolutely don't because they're selling at the Citadel. You'll get what I'm about to say. Is as far as day trading options, retail people are buying them and professionals are selling them, by and large.
Yeah.
And I would love to see what Robinhood's option flow look like as far as buy to sell, right? I bet you like the only there's probably like covered calls on meme stocks people are selling occasionally, like weeklies, but overall you see people buying option lottos. And the problem here is options obviously give you a ton more leverage, but the biggest thing is when you're using them to trade directionally, the other option Greeks, especially the time one, will eat you up, right? If you want to bet that the the SPY, which is kind of like the equivalent of the ES future, if you're going to trade them similar ways, going to go long today, you're going to buy a pretty for that to pay off, you're going to need like a pretty short dated option, and you're going to have a lot of that premium evaporate. Dan, this is more your realm, so maybe you could talk more about.
Well, Jack, you touched on the number one thing there. Why, to me, retail options are not going to be the greatest thing, right? It's premium decay. So you have to think short term. You got to think about what the decay on my option is going to be as we approach expiration. So that's one of the biggest ones, right? So you have a lot of different options breakdowns. For those that don't know, my background in options is actually on the professional side. I was a 30-year bond options trader before I came over to Top Step. So the retail side of things as an options trader, I've never been a real big fan of. From a professional standpoint, I like them, but they take a lot of risk. And that's one of the main reasons I ended up walking away from that aspect of trading. So Jack, decay on the expiration, one of the biggest things to think about. That's hugely important. So when you're buying an option or you're selling an option or however you want to get into them, right, there is decay. So you're buying it based off of an expiration date. They can be weekly, they can be monthly, they can be quarterly. There's different types of expirations on them. Most people are doing a lot of weeklies. Weeklies are, they call them weeklies, or they call them the minis. There's a ton of risk involved in taking those. So you have a couple things that can happen. As decay goes on, it can turn into a worthless option and it's expiring worth nothing. So your investment gone, you're getting nothing out of it, and boom, you have a worthless expiration on that. Another thing to think about too, when you're trading options, yeah, you've got predetermined profit on what you're going to take out of things, but your risk in an options trade can, and a lot of times will be, a lot higher risk than the potential profit to be made. So that's another thing to think about. I will say though, they are fun, and there are great reasons to use options in your retail life. Number one, hedging. It's a great opportunity, right? If you're, because I can sit here and say, I don't know everyone out there. I'm not just a futures trader. It's not the only thing I'm doing. I have a portfolio. I have investments. I have other things that I'm looking at. And to me, options are a great way to create a little bit of a hedge there, right? If I'm buying into some sort of stock, I can create a hedge. I can buy an option further out to kind of cover myself to see if I can protect myself. So there's that idea of protection, cheaper barrier to entry.
Buying a put option on something you own is fundamentally the same as buying insurance on a house that you own or something like that. There's nothing wrong with that. Like, I think that there is a place for options among certain, portfolio risk profiles, which I think are mainly the most common of which would be like buying puts for insurance or selling covered calls for more or less the same reason, just to like give yourself some protection. But I don't think that's how a lot of people, trade them on a day-to-day basis. And like you're saying, the professionals, you run into the same problem that you do if you're just trading stocks, because the professionals are the market makers and stuff are using options with a tremendous amount of hedges on, right?
Right. Like that was my background, right? I'm an options trader. I use futures to hedge my position. Now, I actually recently was working with a couple of professional futures traders. We were developing some stuff. We were trading together, and they wanted to put on some options. Also, they start putting on some options. And I was like, kind of what's your mentality or what are you looking for? And he was like, well, I'm buying calls because I think the market's going to go higher. I'm like, there's more to it than directional trade. If you just want a directional trade, don't trade options. Options are not directional trading. It's going to be difficult because at the end of the day, the reason I think options are one of the more difficult things, it's tough to teach. It is one of the most complicated things out there. My dad always told me, he's like, options are your chess. There are a ton of different moves. There are a ton of different outcomes. But the nice part about them, there are multiple ways to make money. So you can be wrong on direction, but you can create, your hedge can create opportunity that you can make money on. And that's what I love about them, is it kind of, once I'm in, then I have a couple different ways to skin the cat, as they say.
Yeah. Black and Scholes, you talk about like complicated, literally won the Nobel Prize for developing the, I believe, for the Black Scholes option pricing model.
Which everyone still uses.
Yeah. In like Nobel Prize in economics. Although, hey man, one of them went on to join Long-Term Capital Management, the hedge fund, and it exploded. So if you
it just goes to show you, it doesn't matter how smart you are.
It doesn't matter how smart you are. The market can eat up anyone like that. But options are, of all those, futures have their nuances. But I think it's safe to say, of all those things we lifted, options are the most complicated. And there's stuff beyond, there's derivatives that are more complicated than options, but they're all essentially forms of options.
Right. They're complicated. That's, I think, the biggest thing to think about when it comes to options. And they, face value, they seem realistic, right? Okay. If I'm going to buy a set put against Tesla, and this is what the face value sounds realistic, but what's actually happening involved there? And a lot of times it's going to be a retail person kind of getting stuck going against a professional, and the playing field is not even there.
Yeah. So I guess we can get to why I think, though we trade both, why we both kind of think that for directional day trading, which is what most people are doing, that futures are the best. And we will address the question the person asked about, he's come for stock options, thinks futures are too volatile. How can I manage not to trade and stepped out? Well, I think this person is getting tripped up by the first actual advantage of futures that you have to understand and control, is that they are much more leveraged than, when we talk stock margin, I feel like most places, I don't know, at Fidelity, I've never really explored how much they'll give you, but maybe it's 2-to-1, and maybe you could do like a double long something, so like in the 4 range. But like futures, right? A lot of these contracts you're putting down for ES, 5%, something like that, and that's if you're holding overnight. So in that respect, you're getting 20-to-1 leverage, right?
Leverage, yeah.
Yeah, you're not going to get 20-to-1 leverage trading stocks that I'm aware of, and so that is good in that you get as much sort of movement and leverage as you want, and that has its pros and cons. That would be my first reason. So to answer the guy's question, basically, is if you're coming from stocks and options and you keep on getting stopped out trading futures, it's because you're trading too big compared to where you need to spread your stops out for something that's going to move a lot more dollar-wise, right?
Right. And I would add into that too, Jack, like you do come into futures, you're going to have more volatility in the dollar sense. If you're trading stocks, we just talked about Amazon just a minute ago, down $280 or whatever a share. That's a huge astronomical move. If you had a one lot on in Amazon, that's $280. You have a one lot on in crude oil, that's 28-cent move in crude oil, and you're at that $280 loss. So the actual dollars and cents going in and out of your account are much more extreme when you come into futures. And so you have to kind of come in with the right expectation, like, hey, the money's going to come and the money's going to go a lot faster than a lot of this other stuff I've been doing. And that's one of the draws to trading into the futures world, because like any trader out there, it's that quick return. We want that immediate satisfaction. I don't think there's a trader out there that does not enjoy immediate satisfaction. And that's what futures trading kind of provides. You can, at the end of the day, on a good day, you've got that immediate satisfaction of, this is how much money I just made. To do that when you're trading, or investing into a stock, it doesn't come that easily. So manage those expectations you come in. And then Jack, like you said, recognizing what's your appetite for risk, going in a little bit deeper on where those stops are. If that $300-400 is a lot, what you're used to compared to what you're used to in a given day, you've got to kind of come in and recognize, hey, what's my appetite for risk and how am I going to be able to handle this? I think more often than not, traders that want to manage their risk really, really well end up stopping themselves out way too tight because they're afraid of losses. And then that's when those, little, what do they say? Death from a million cuts, that's what's going to happen. Don't let it be all these little nicks and little scratches against you. Take some room, take some time, let things evolve and let the trade play out.
Yeah. The traders that struggle we see, it's overwhelmingly not trading too small with too wide stops. It's trading too large with too small stops. And those two numbers are directly impact each other. So if I was someone who's coming from stocks, I think it would help to think in nominal terms to start off with. If you're trading the ES, for instance, just to make some round numbers, let's say the ES was at 4,000. That contract is 50 times that, which is 200,000. So think about what's in your account and think, would I be willing to buy or sell $200,000 worth of SPY right here? That will give you an idea of how wide you need to be, or if maybe you need to move down to the micros, right? I mean, those are great too.
They are. And I would love to touch on micros just a little bit here too, right? We're talking volatility. If you're going through our program, you're in the combine, you're in a simulated market. Keep in mind what the micros are designed for. Micros are designed to, and as an entryway into the future, into the E-mini. Thinking about depth of market, right? I know a lot of traders, they want to size up in the micros. They want to trade 50 lots. That's not realistic.
Not efficient.
It's not efficient. People love, I think there's a lot of people want to talk the talk like, hey, I'm trading. Yeah, I got a 50 lot on right now in the S&P. That's not what that's there for. Micros are a great entryway to get comfortable, to kind of build things up. And then all of a sudden, if you're putting on 10 and 20 micros, that's when you got to start thinking about, all right, let's graduate from the micros to the minis.
That reminds me of, there's a guy that used to trade at the firm I was at. Didn't last too long, but used to love to. So the nominal value of the cash treasury bonds is $1 million a piece. They don't move that much, so the margin's very low. But he would love to, if he was on the train or something, to be like on the phone with his clerk, instead of saying like, just, sell me 5 lots of the spread, being like, yeah, sell me 5 million 2 years, stuff like that. It's like, no one cares. No one cares.
Yeah, no one cares. I used to, when I first started and I was learning all that stuff, and I'm like, that's what this is. And then I started getting panicky and I was like freaking out when I first started learning like the notional values of bonds. And I'm like, this is crazy. This is crazy. This is a lot of money. What am I doing? What am I doing? I got real anxious.
Yeah, that's definitely anxiety provoking. That's not a good thing to, I think just to start, this is more of an exercise to give you an example of leverage, especially if you're trading outrights, which I think most of the retail traders are. And in which case, just futures, I mean, to sum everything up, futures are the most efficient product for doing trades like that, because there's no time premium like there's with the option, and you still get a bunch of leverage, and there's smaller ways to do it. So that's kind of why I think that if you're doing day trading, futures are your way to go.
I would agree 100%. I've kind of been around the block. I've traded a lot of different things. Futures for day trading, futures are going to be your best opportunity, because you know what the best part about it is? If you're wrong, you can be done. Options, it's a little bit harder sometimes. If you see it going against you, how you're getting out, the losses you're taking, then you start processing all the other ways to adjust yourself. And it can lead down a little bit of a spiral where futures, you can get out, you can be done, and you can call it a day and maybe start your weekend early.
Yeah. Speaking of which, yeah. And if you want to learn more from some pros about trading futures, he's got a hype. Make Home Money's been killing it. That is, we'll put the landing page in the description for this podcast, but John Hoagland's been doing live trading on Tuesday and Thursday mornings at 8:20. He 4 or 5 days a week at 7:45. Is there a Friday forecast? Yeah.
Yes.
Or no. Yeah. 7:45 a.m. on the Top Step YouTube. 5 days a week, you can get the forecast with John Hoagland. and he's doing live trading after that on Tuesdays and Thursdays. So come on by and learn more about that. And that's all I got
Outstanding.
for now. Hopefully the NASDAQ doesn't implode after these Amazon earnings.
It feels like it might just want to do that.
Oh, the tangled lives we live. Well, everything's still good. I'm going to go have dinner with the family and not really care about it.
There you go, Jack. You have yourself a nice afternoon. And everybody out there, have a nice day.
Yeah. Namaste and trade well. We'll see you next week.